Spot Bitcoin ETFs, a new era of crypto investment. A Spot Bitcoin ETF is a type of exchange-traded fund that tracks the price of Bitcoin. This means that the ETF's value will fluctuate in line with the current market price of Bitcoin. ETFs are traded on traditional stock exchanges, making them easily accessible to a wide range of investors. Spot Bitcoin ETFs provide a regulated and convenient way to gain exposure to Bitcoin without directly owning the cryptocurrency. This opens up Bitcoin investment to a larger pool of investors, including those who may have been hesitant to navigate the complexities of cryptocurrency exchanges. The significance of Spot Bitcoin ETFs lies in their ability to bridge the gap between traditional finance and the world of cryptocurrencies. For years, institutional investors and individuals alike have sought a more familiar and regulated way to participate in the Bitcoin market. Spot Bitcoin ETFs offer a solution by allowing investors to gain exposure to Bitcoin through a well-established financial instrument. This has the potential to attract significant capital into the Bitcoin market, further legitimizing Bitcoin as an asset class. The emergence of Spot Bitcoin ETFs marks a turning point in the evolution of cryptocurrency investments. It signifies a growing acceptance of Bitcoin by mainstream financial institutions and regulators. As the cryptocurrency market matures, Spot Bitcoin ETFs are poised to play a crucial role in driving wider adoption and integration of Bitcoin into the global financial system. The availability of Spot Bitcoin ETFs is expected to simplify the process of Bitcoin investment, making it more accessible and appealing to a broader range of investors. Spot Bitcoin ETFs operate by holding Bitcoin as their underlying asset. The ETF provider purchases and stores Bitcoin, ensuring that the ETF's value is directly tied to the price of Bitcoin. Shares of the ETF are then offered to investors on stock exchanges. When investors buy shares of a Spot Bitcoin ETF, they are essentially buying a portion of the ETF's Bitcoin holdings. The price of the ETF shares will fluctuate throughout the trading day, reflecting the real-time price movements of Bitcoin. This mechanism allows investors to participate in the price appreciation of Bitcoin without having to deal with the technicalities of buying, storing, and securing Bitcoin directly. Investors can buy and sell ETF shares through their regular brokerage accounts, just like they would with any other stock or ETF. This eliminates the need for setting up cryptocurrency wallets or managing private keys, simplifying the investment process. The ETF provider is responsible for managing the ETF's Bitcoin holdings, ensuring the security and safekeeping of the assets. They also handle the creation and redemption of ETF shares to maintain the ETF's price correlation with the underlying Bitcoin price. This structure provides investors with a convenient and regulated way to gain Bitcoin exposure without the complexities associated with direct ownership. Spot Bitcoin ETFs offer several advantages over other methods of Bitcoin investment. Firstly, they provide a regulated investment vehicle. ETFs are subject to regulatory oversight by bodies like the Securities and Exchange Commission, SEC, ensuring investor protection and market integrity. This contrasts with the largely unregulated landscape of cryptocurrency exchanges, which can pose risks to investors. Secondly, Spot Bitcoin ETFs offer convenience and accessibility. Investors can easily buy and sell ETF shares through their existing brokerage accounts, eliminating the need for navigating the complexities of cryptocurrency exchanges. This streamlined process makes it easier for both institutional and individual investors to add Bitcoin exposure to their portfolios. Thirdly, Spot Bitcoin ETFs enhance liquidity and market efficiency. The trading of ETF shares on stock exchanges provides a more liquid and efficient marketplace for Bitcoin compared to some cryptocurrency exchanges. This increased liquidity translates into tighter bid-ask spreads and reduced price volatility, benefiting investors. Despite their many advantages, Spot Bitcoin ETFs also come with some drawbacks. One potential concern is the management fees associated with ETFs. ETF providers charge fees for managing the ETF's assets and operations. These fees can vary depending on the provider and can eat into investor returns over time. Another consideration is the potential for tracking errors. While Spot Bitcoin ETFs are designed to closely track the price of Bitcoin, there may be slight discrepancies between the ETF's price and the actual Bitcoin price. These tracking errors can arise due to factors such as expenses, trading costs, or the ETF's replication method. Additionally, investors in Spot Bitcoin ETFs do not directly own the underlying Bitcoin. They are essentially buying shares of a fund that holds Bitcoin. This means that investors do not have the same level of control over their Bitcoin as they would if they held it directly. They cannot, for instance, use their ETF shares to make purchases or transfer Bitcoin to their own wallets. The advent of Spot Bitcoin ETFs is expected to have profound implications for the future of both the cryptocurrency market and the broader investment landscape. As Spot Bitcoin ETFs gain traction, they are likely to attract significant capital from institutional investors who have been waiting for a regulated and familiar way to enter the Bitcoin market. This influx of institutional money could drive up Bitcoin's price and further solidify its position as a mainstream asset. Moreover, Spot Bitcoin ETFs are expected to simplify and democratize access to Bitcoin investment. By making Bitcoin accessible through traditional brokerage accounts, ETFs remove the technical barriers that have previously discouraged some investors from participating in the cryptocurrency market. This could lead to wider adoption of Bitcoin as more individuals become comfortable with the idea of investing in cryptocurrencies. The increasing acceptance of Spot Bitcoin ETFs by regulators signals a maturing of the cryptocurrency industry. As regulators become more comfortable with the underlying technology and market dynamics, we can expect further innovation and development in the cryptocurrency ETF space. This could include the introduction of ETFs tracking other cryptocurrencies or offering more sophisticated investment strategies. The recent approvals of Spot Bitcoin ETFs by the SEC represent a major milestone for the cryptocurrency industry. For years, the SEC has been hesitant to approve Spot Bitcoin ETFs, citing concerns about market manipulation, custody risks, and investor protection. However, the recent approvals indicate a shift in the SEC's stance, acknowledging the growing legitimacy and maturity of the Bitcoin market. These approvals pave the way for wider adoption of Spot Bitcoin ETFs and have the potential to reshape the cryptocurrency investment landscape. The SEC's recognition of Spot Bitcoin ETFs as a viable investment vehicle lends credibility to the cryptocurrency market and encourages further institutional participation. This in turn is likely to drive innovation and growth within the industry. The SEC's approvals also set a precedent for the potential approval of ETFs tracking other cryptocurrencies in the future. As the cryptocurrency market continues to evolve and mature, we can expect to see more ETF products emerge, offering investors a wider range of options for gaining exposure to this burgeoning asset class. The SEC's recent actions represent a significant step towards integrating cryptocurrencies into the mainstream financial system.